Hello, I'm Richard Bowser. I'm the editor of Property Investor News magazine. I'm here today with Stephen Johnson of Shawbrook Bank to talk about the market and lending prospects for property investors in 2015. Would you say that valuers are generally being overcautious?
I probably would not, if I'm being honest. I think what we have to remember is, we need a sustainable market, and already we've seen quite a quick return of risk appetite, which has surprised me a little bit, where 80-85% loan to values are now fairly commonly available. And I think valuers clearly are still very cognizant of the previous cycle and where the market got very bullish, and there was some quite dramatic corrections, and there was oversupply of certain properties in city centre sort of flat schemes in some of the secondary regional cities and locations, as it kind of jumps to mind. So I think the valuer community is very mindful of that. I understand the tension, and investors are clearly looking to, as I say, grow quickly, and one way you do that is by effectively riding the kind of capital appreciation in your portfolio. But I think everybody needs a sustainable market, and the valuers have a very important role there, and they have a duty of care to the investor, but also to people who rely on the valuation, like lenders, to be sensible in their valuations that they use. So I can understand where people get that sensitivity from, but on balance, sometimes the market can get a bit carried away, agents can get carried away, and valuers sometimes can look through that to kind of to get a more realistic perception of what true value is.
No, that's you articulated it.
It's a tricky area,
yes.
And one of the things we get with lending applications very early on is we kind of, customers and clients and investors think they know what the value is, and it may be led by a kind of an ambitious agent. And you look at the rental income and you kind of say, well, wow, that's a pretty low yield. Is that really kind of the yield you expect to see in that part of the country? So we do try to act as a bit of a common sense at the outset. And one of my sort of things that I talk about in whenever I present to property investors is just be cautious around the valuation assumption you're using. Discount it a little bit from what an agent may tell you, and does it still work on that basis, so that it's you won't be disappointed if you're relying on a kind of a top of the market valuation coming in, because you could get disappointed through the loan application process.